Good evening, everyone, and welcome to Mongo Spaces this Thursday evening. Our discussion is around Jubilee Life Insurance. The CEO is here to give more insights on the company, the product, and what kind of things that they have in store for us, and a little bit of understanding of Jubilee Life Insurance and life insurance in general at the end of the day. So our aim in some of these spaces to move you on a scale of 0 to 10, we want to move you from 0 to at least 7 over 10 in terms of understanding the company, the products, the person who's leading the company. So that's the aim of our Twitter spaces, to create a place where you can have informative discussions on markets. So our focus is simply markets and anything that influences markets and the economy and companies, of course, in that regard. So today we are privileged to have the Jubilee Life Insurance CEO, Osman. I'll allow him in a minute to introduce himself, tell us a bit about himself and a bit of what he does as CEO. Sometimes maybe people don't understand what CEOs do. Osman, maybe you can say hi and introduce yourself, and then I'll pick a few things here and there to just double down on.
Thanks, Eric. Good evening, everybody. My name is Asman Mugambi. I'm the CEO of Jubilee Life Insurance. Been with Jubilee Life for the last year or so, but have been in the insurance industry for the last 20 years. I've had experience in various other companies. And today, hopefully, I will share a little bit of what I've gained throughout those years with the listeners so that we can assist in terms of financial planning, in terms of ensuring that we build wealth as Kenyans. And of course, I represent Jubilee Life. Jubilee Life has been in the industry for the last 80 plus years. It's an old business. We have a lot of experience in terms of insurance. We have a lot of experience in terms of investments, asset management, and we hope that we are able to provide very good solutions to Kenyans. That's why we've been around for so long, and we have many customers who've trusted us in this regard. So, Eric, I hope to share what we can be able to provide as we go along. Thank you.
Tell us a bit about the CEO role. How did you get there, and what do you do day to day as CEO of a life insurance company? You guys are meant to think long term, but perhaps day to day, what are you doing?
How did I get here? It's been quite a long journey, as I said, over the last 20 years. CEO, of course, my role is basically to think about the strategy, to think about how we can get this business to the next level, how we can support more customers, get protection, how we can support more customers, provide for themselves and for their family, how we can support more customers, save for retirement, save for other needs. That's basically my role. Of course, I lead a team that supports me in this regard. We have about 200 members of staff within the Jubilee Life business and about 1,500 advisors across the country. So it's a large team with a lot of responsibility, but I have a great support structure to assist me. I'm an actuary by training, so it was par for the course for me to go into the insurance business, and I've had a good journey throughout, and that experience is what has helped me get to the level of the CEO.
Did you envision being a CEO at some point when you started off your career?
When you start your career, you always have that ambition that you want to get the top where you can be able to influence decisions and influence strategy. And that was also my ambition as I was starting out my career. And I've been lucky to be able to go through that journey and get to this position where I can contribute to my country, to my community, and to the industry.
I'll come back to you in terms of lessons and reflections in your journey and all. But maybe you can put in context Jubilee Life within the context of the broader Jubilee Insurance company, so people get to understand what Jubilee Life is all about and how is that distinct a little bit from Jubilee and how is it connected to that.
Jubilee Life is part of Jubilee Holdings Group, which is part of the Aga Khan Development Network. Jubilee Holdings has investments in life insurance, the company that I'm part of, as well as health insurance, as well as asset management. We are present in Kenya, Uganda, Tanzania, and Burundi, and we are able to provide our solutions to 20 East Africans through life insurance solutions, health insurance solutions, as well as asset management. Within the Aga Khan network, of course, we have many other businesses that are part of that network and who we engage with as we provide solutions to East Africa.
So then the products are portable. Are they portable across the region? So if you take a product here in Kenya, you can perhaps move it across the border. Is that part of your offering to clients or value proposition?
Of course, the different countries have different regulatory frameworks. So as we speak right now, that may not be entirely possible. And perhaps it's an area of improvement that we can, as East Africans, that we can think about, that If you're Kenyan, you can go to Uganda, you get a solution and move with your solution to Uganda. So right now, we may not be able to do that. However, the solutions that we provide are fairly similar across the region. And even if you have a health insurance policy in Kenya or a life insurance policy in Kenya, if you go to Uganda, you will be able to get a similar solution within Jubilee.
That would be nice though, and the portability aspect of it in terms of the products themselves. Perhaps now we can come back to the products themselves, the Jubilee Life, now that you place it in context in terms of the regions and all. For Jubilee Life Insurance, what are some of the products? And as you talk about the products, you can also tell us a bit about the differences between the different types of insurance. You can tell us a bit about term life, whole life, universal life, and all that. You can put us in context, define them for the layman so that they can be able to understand the products that you have in relation to the kind of different types of insurance that are offered within Jubilee Life.
Great. We say at Jubilee Life that we provide solutions that support customers throughout the customer life cycle from the time they are born until after retirement. We provide education saving solutions. So if you have a child, you're able to put money aside that will enable you educate the child throughout from high school to university, primary school. We also provide investment solutions. So if you have a project that you want to do, if you want to keep money aside for future business or whatever other need that you have, we're able to provide that. We also provide solutions to enable customers save for retirement. So we have pension funds and pension solutions to enable customers save for retirement. And once you have reached retirement, we also provide solutions to enable you utilize the funds that you invested. For example, what we call annuities. So if you've saved up a lump sum, after retirement, we will give you a payment throughout your life to ensure that you don't have to worry after retirement when you don't have any income. In addition to all this, we also provide pure life insurance solutions where we say if anything were to happen to you, then we will be able to take care of your dependents and ensure that they don't suffer from economic challenges. So all these solutions are provided, and we provide this to both individuals as well as corporates across the board, large corporates, government, and medium enterprises across the board. So we make sure that we provide solutions across the board.
In terms of the solutions that you're offering, if someone who's completely new in insurance, or where can they start? Sometimes someone is very overwhelmed about all these products being offered. What are some of the simple products that someone can start off with?
Like I said, we have financial advisors across the country. And what we do is before we provide you a solution, we always try to understand the circumstances that you're in, what you plan to achieve in the future. And then we can tailor a solution that meets your needs. We have solutions that are fairly priced. So if you're just starting out in your career or in business, we can start off with a sort of a lower priced solution. And then you build on that. You build on that over time. Again, what we try to do is not to box you and give you product, is to understand your circumstances and work with you to agree a solution that fits your need and fits your circumstances. But we do have products for those who are starting out. We have products for those who have already built up funds and they want to maybe have sort of larger investments. And all of those we're able to provide through sound advice based on your circumstances.
So then if I hear you correctly, then the best point of contact is just to come and discuss with a financial advisor, and then they're able to perhaps give you better solutions that suit your need, because every person comes uniquely suited with their own needs and background and all.
Exactly. It's very important as you're deciding on which solution to take for you to go through that process of getting proper advice so that you can be able to get the best solution that suits you and that fits your circumstance.
So in terms of then key terms, sometimes which people need to understand that, like term life, whole life, endowment policies, if you could break them down a little bit once again, so that someone can have a grasp of so those key terms as we may use them along the way.
Yes, we do have the endowment products, which are traditional products that have been there in the market for a long time. These products provide guaranteed benefits in terms of when, if anything were to happen, but they also provide guaranteed benefits when the policy matures. And they're very good in terms of providing protection, especially in matters of education, so that you're able to provide the education that the children deserve. And if anything were to happen, the funds are still available for them to be properly educated. As you've said, we also have pure insurance products, what we call term life products, whole of life products. And again, these ones are also meant to provide protection. These are not those days when you could comfortably purchase an asset like land and pass that on to your kids if something were to happen. These products are geared towards that, to be able to protect your family, to protect your children. If anything were to happen to you, you're able to pass on significant funds to them so they're able to cater their needs. And like I said, we also have retirement solutions where you invest in a retirement product geared or targeted at ensuring that you have sufficient income when you retire. And then after retirement, we have other products like annuities where we will pay you a monthly pension for life after retirement, again, to ensure that when you don't have income from employment or from business, when you're older, you have something that comes in every month. So those are the key solutions that we provide. And like I said, these solutions are both for individuals as well as for groups.
In terms of retirement, I think younger people tend to think that they're really far away from retirement when you get into work. But my way of thinking about it is almost the first day at work should be the first day that you think about your retirement. What's your advice to younger people, especially when you think about 2025 financial planning in the future and beyond? How would you advise people to think about retirement investing? Because a lot of people also in the African context, the norm is for the parents to rely on their kids to take care of them in old age. In terms of retirement planning, how would you advise a young Kenyan who's starting out their job, their work right now?
Eric, even as we speak now, it's become much more difficult for kids to take care of their parents. And for us, we don't really expect that when we retire, our kids are going to be there supporting us in retirement. It's very important that you start early. Again, often enough, as you're saying, we don't start this process early. It's important to start early. We need to take advantage of the power of compound interest because these retirement funds are going to be invested and they're going to earn over a long period of time. So it's important that is done early on. What we usually say is you should target to make sure that at retirement, you are able to earn at least 70% of what you are earning before retirement. And this is why the advice that we provide is very important because we're able to tell you, depending on what age you are, when you retire, this is how much you need at retirement for you to be able to continue earning at least 70% of what you expect to earn at retirement. And why is this important? It is important because after retirement, you really don't have the strength that you have while you're working. You need funds coming in to take care of your daily needs, to take care of your medical requirements, because at that time, of course, healthcare is very important, and to take care of also other needs. So it is very important that planning is done and done very early, and it's done continuously.
But then in terms of balancing present needs and future needs, I think the normal Kenyan is actually very pressed in terms of current needs. So there's more month at the end of the money. So then how do they balance that out to make sure that they actually set aside some cash for retirement and for a life insurance in that context? What would be advice there from your observations in terms of sitting down with clients and all?
Times are tough. The economy is not easy for many people. However, I think what we usually advise is try and see how you can budget for yourself. The advice that we usually provide is try and make sure that you are able, at least for the long term, to save at least 10% of your income for long-term savings, long-term retirement savings. It is very important that you do that. This usually requires a lot of budgeting, which requires sometimes even denying yourself some things just so that you make sure you have something kept aside, because it is worse if you get to retirement age and you don't have enough savings. It is much worse than you keeping the little that you have aside and putting it in an investment, at least to make sure that you have something when you retire. So it's not easy. Nobody will say that. However, in the best way you can, do some budgeting, see if you can keep aside at least 10% of what you earn and make sure that is kept in a long-term investment that grows, that is stable, so that at retirement or at the time when you're leaving employment, you have something that can assist you to survive.
Would it be best then to think of it like as a deduction and then immediately send it to the retirement planning instead of waiting until all the expenses are done so that you can be able to finance the retirement? Is that a better way to think about it?
It is actually a much, much better way to think about it. We usually organize with employers or with customers where you have a monthly deduction so that even as you're making your plans for the month, that is usually not part of what you think about. And that makes it a lot easier because as you're doing your budget for the month, those funds are already taken out and then you're able to plan a lot better. So I agree with you. That is what would be best if you can be able to afford it, because then you don't think about it. You don't get to include that as part of your budget for other things.
And then in terms of life circumstances changing, getting married, children, and home ownership and all, how do you update your life insurance coverage to reflect these shifts along the way? Are you stuck with one policy until perhaps retirement and all, or can you update that by speaking to your advisors and all?
Of course, as you're investing, as you're saving, you also need to think about inflation. Inflation is something that everybody has to worry about. What was costing 5,000 50 years ago, probably you could even buy a car with it. Now, maybe a pair of shoes. So you always need to think about that. And what that means is that as your circumstances are improving, as your income is increasing, then the amount that you're saving or the amount that you're keeping aside for insurance then also needs to increase. Usually, if somebody is in employment or in business, their disposable income increases, their assets increase, the level of wealth increases, and therefore they have more to protect, or they have more to save. So it is advisable that as you progress in life, as you become more successful or you get more assets, that you also increase the amount that you're putting aside, because your lifestyle is also different. Then you would need much more as you go into retirement. And again, if you have more assets, then you need to put aside more insurance so that you can protect yourself, so that those assets don't get affected if anything were to happen. So it is a constant process. And when you get an advisor, you need to walk with that advisor along that journey. So it's not a one-off, it's a journey throughout life where they will keep on engaging with you to ensure that your savings, your protection is keeping up with inflation and is keeping up with how your circumstances are changing.
And then in terms of the money that the client gives to you, like they contribute monthly and then they obviously wants to receive that money back towards retirement, and or if something happens to them, occasionally their loved ones can receive the money. But then where, maybe perhaps someone is wondering, where does Jubilee Life take that money once you receive them from the clients? Where are you invested?
Very, very good question. So, of course, Jubilee as an institution is able to take advantage of very many asset classes. We're able to invest in bonds. We're able to invest in money market, treasury bills. We're able to invest in fixed deposits. We're able to invest in equities, in property. We're able to invest in alternative investments to ensure that we have a diversified portfolio that provides a stable income to our customers and also provides protection in the event that any asset class has a challenge. So as an institution, we are better able, because we have a bigger pool of investments, to diversify and take advantage of returns from the various asset classes that are available.
So then they can be confident that you're actually using their money wisely, and at the end of the day that the company itself as a whole will be there to pay. There's been a lot of experiences with insurance companies having issues with repayments and all. Is that an assurance from your CEO?
Yes, Eric, we've been around for 87 years, and throughout that time, we've had many customers who've trusted us. We take our investment process very seriously. We have various ways and governance structures to ensure that whatever decisions we make, decisions that are well thought through, and that we do not take risks with customers' money that we cannot be able to support. So this is a responsibility that we take very seriously. And this is why we've been around for so long. And this is why so many customers have partnered with us. And those customers have been quite happy at the end of their investments. And for some of them, we've stayed with them even beyond retirement. And we've been able to go through that journey with them. So we can confidently assure anybody who wants to partner with us that this is a company that is trusted, and it's a company that takes this responsibility very serious.
One more question before I can invite the listeners to ask questions. Is it possible, perhaps once you've taken out a product, to be able to use that as an asset to acquire maybe perhaps a loan or mortgage or something like that? Is that something that can be used as collateral sometimes?
Yes, we have products where if you have a challenge or if you want to get into an investment without necessarily exiting the product, you can get a loan at affordable rates. And we have many customers who take advantage of this, because these insurance products are long-term products and those loans are provided by us. The process that we use for that is much, much easier, much simpler compared to if you were to get that from a bank, for example. So that is a solution that we provide to customers as well. The retirement products that we have, of course, governed by the retirement benefits regulation, but they also include some aspect of guarantee if you want to take out a mortgage. Of course, governed very strictly by the RBA, but again, you're able to use that as your security to be able to get a mortgage. So all this available to our customers.
Thank you, Askan. Let me give you a little break to grab a glass of water. In the meantime, I want to invite the listeners to ask questions. If you check our pinned tweet, if you go to our page, Mango Capital, you can see there is a poster for today's spaces. And just below it, you can write a few questions. We are taking note of them and we'll be able to forward them to the CEO. Otherwise, if you're not too brave, you can also DM us directly and just send in your questions, and then we'll be able to respond to them as quickly as we can. We're going to handle as many questions as we can as they come in. I have a few more questions, and then I'll return to the questions from the audience. So back to you, in terms of thinking about now financial planning for 2025 and beyond. I know it's January and it's one of the months that is most hurtful to the wallets. But in terms of your advice to preparing for 2025, just general advice for investment, what are some of the things that you've gleaned from your clients or perhaps from your time in the market to be able to tell people to think about maybe financial planning as a whole and life insurance as a component of that? What are some of the reflections that you picked up that you would want to share with our listeners today?
As a country, I think people are also becoming aware of investment opportunities or savings opportunities. And we're seeing quite a lot of interest from Kenyans. But for me, I think it's really to encourage everybody who is able to make sure that we consider this as a critical component of what we do. Saving for education, investing in solutions like those Jubilee is providing. We were just having a conversation with somebody. When I was in university, it was costing, for those of us who went through the regular program, maybe 40,000 or something like that. Think about how much that is now, and then transpose that and think about your kids. How much you then need to keep aside for them to be able to go to university in the future. It's becoming very expensive. So I would really encourage everybody, whatever need you have, get in touch with an advisor, preferably a Jubilee life advisor, and let's start this journey in terms of keeping something aside. And we have solutions across the board. We have solutions that are fairly priced. We have solutions for those who want to make significant contributions. We have a new product that we are referring to as Faida Elite Insurance Plan that is targeted those who are able to keep aside at least 5,000 shillings a month. The returns for that product are very competitive. We have gotten feedback from customers that they want to make sure that whatever they put aside has competitive returns, and that's what we have done. This product is able to show you what is supposed to go to your investment and what is supposed to go to the insurance, and you have a choice to decide how much you will put aside for insurance. You can put a minimum amount of 100,000, or you can go all the way up to 1,000,000 shillings. So we have solutions that would cater to everybody. And this is the time for you to start this journey and make sure you keep something aside for the future.
Quick one. In terms of misconceptions about life insurance, I'm sure in your 20-year journey to becoming CEO, you've encountered a lot of misconceptions along the way. Perhaps you can share a few of the misconceptions and maybe provide a rebuttal to some of these that you think would be really good for our listeners to know today.
I think a lot of people perhaps have not fully understood, especially the traditional insurance products, which targeted to be more long-term. So you're expected to have a long-term contract, a long-term relationship with the insurance company. And at times, if you leave that contract a bit early, then usually you may have penalties around that. So I know that is a significant issue in the market. And this is why, as insurance companies, we are also evolving the solutions that we are providing. We're also responding to that and coming up with products like the product I mentioned, Faida Elite Insurance Plan, where there's a lot more flexibility. There's a lot more flexibility. You can put your money in the solution. If you want to leave early, you're able to do that. It's not like the old ones where you had to stay for 2-3 years. And that has been the main challenge that we've had in the industry. And of course, a lot of people have been asking, so if I put in my money, how do I know what is going to investment and what is going to pure insurance? And the old endowment products perhaps did not have that distinction. Now we are changing how we are structuring our product so that we're able to tell you, this is how much is going to your insurance, this is how much is going to investment. We are becoming a lot more transparent, and trying to educate Kenyans. Even for an insurance company to come on Twitter and have a conversation like this is not something that we've done very well in the past. And this is what we're trying to do, to make sure that we inform everybody what we're able to provide and assure them that the solutions that we're providing are going to be beneficial to them and that they should be able to trust us in terms of what to expect from our solutions.
I think there's been a lot of change. Insurance used to be a bit more mysterious in the background. And I think in partnership with Jubilee Life, we've been able to expound a bit on some of these misconceptions. I think address them directly, invite people to the table in terms of discussing retirement. I noted yesterday that one of the heroes we have in financial markets is Warren Buffett, is around 94 and speaking about death soon. Like it reminds you of the fragility of life and all, and also reminds you that you also need to think about it. Like retirement is nearer than you think at the end of the day. So you need to think about that. So in terms of overall financial strategy, how should someone think about integrating life insurance and retirement products in the context versus traditional assets? The way I think about it now, after having discussed with you, is that insurance is actually a way to invest in traditional assets because I give you the money and then you go and invest in the bond market and all. So how do you think about in terms of life insurance in the portfolio that someone has in the markets?
In addition to the investment that we do, we also provide protections, your pure life insurance. And what that does is it protects you in the event that anything happens to ensure that your dependents don't then have to sell the assets that you've built up over time. Like I said earlier, we are no longer in the space where you can be able to have land or property in a significant way that you can then share with your dependent. And life insurance specifically is very important in terms of passing on wealth to the next generation. So as you build up your assets, as we invest for you in terms of the bonds, the shares and all that, you also need some pure life insurance where you can then protect those assets so that if anything were to happen, then those assets do not need to be sold for your dependents to be able to cater to their needs. The way we are looking at the insurance business now is not just the traditional pure risk products, but we're also telling you we can provide you with investments, but these two are strongly interlinked. We cannot leave them aside. And of course, the protection that we give is not just for death, which sometimes people don't like talking about, but we also provide solutions where if you get any severe illness, then the insurance company is able to come in and support. By severe illness, a serious illness like a heart attack and those kind of things. If you have a disability, maybe that reduces your ability to work or do business, the insurance company is also able to assist. So we are giving a holistic solution so that you can be comfortable, free of worry as you go about your business.
And then there's also this developing economy where you have freelancers, gig workers, small business owners. You have products for these guys because the income fluctuates from month to month, or at least they have this lump sum that comes in terms of freelancers, especially. And lately in the news, you see a lot of artists who are struggling with financial freedom in terms of advising these freelancers, gig workers, small business owners who get lump sum at particular moments in time. How do you advise them to think about retirement also in relation also to life insurance products that you offer?
That's a very good question, Eric. So, like the solution that we've come up with, the FIDA insurance plan, is incredibly flexible. So, you are able to make contributions into the product. If for whatever reason you're not able to continue for some time, you can stop, then you come back. If you get lump sums as you do your work, you can also be able to put in those lump sums. And the policy does not lapse. It doesn't go off. It remains there and continues growing in terms of interest. So it's a flexible solution specifically for those who are in the what we call the informal market or they're self-employed, because then it gives them that flexibility. And even the pension solutions that we have, the individual pension solutions that we have, again, you're able to put in what you have. If maybe you don't have an income for some time, you can stop, then you come back. Very flexible solutions and very well attuned to the new way of doing business, the gig economy as you're talking about. And we are also targeting to engage Kenyans as they go into that to utilize these kind of solutions as they will help them.
There's nothing to worry about if the income is fluctuating a lot. They should just come and discuss with you and have a plan in a way with your financial advisors, right?
Exactly. They should come and discuss with us and we will assist them in that process.
I want to look at a few questions that have come in the last 15 minutes or so. One has to do with Bitcoin. Someone is asking, is Jubilee Life exploring investing in Bitcoin? So maybe people don't understand that you have a regulator. The IRA and RBA do have a say in terms of your investment allocation. Could you speak to that in terms of who regulates the insurance sector and especially Jubilee Life, so that you can also understand that in that context?
Yes, thank you very much, Eric. Yes. So, of course, we are highly regulated, so the Insurance Regulatory Authority, as well as the Retirement Benefits Authority, and they have provided guidelines in terms of where policyholders' funds or customers' funds can be invested. We have crypto coming in, but I think people are still trying to understand it. Like I said, we always want to make sure that whatever you give to us, whatever investment you make with us, is safe and secure. And I think maybe in the future, crypto will come in, but I suspect that that will be at a point where we can fully understand it, so we understand the risk, and it should also be properly regulated. Right now, we don't have it, but I'm sure as we go along, it may also come into the picture.
There's a question here from Anne. I think it's just a repetition of a question that I asked before, but I want maybe to frame it slightly differently. What's your advice to younger generation in terms of thinking about retirement planning, which appears so far away? You know, when you're 25, retirement is like 60, 70 there. How would you advise them in terms of the context that we spoke about, the power of compound interest?
I'll repeat what I said. Think about it. 5,000 in 1970, you could buy something significant, and now the value of that has really reduced. So it may seem like it's far off. However, if you don't plan for it, if you don't keep money aside, you'll get to that retirement age and you'll not have enough. And then you'll struggle in terms of meeting your needs. Again, these are conversations that you always have to continuously have, especially with young people, to say things will be much more difficult when you get to retirement if you don't plan for it. If you don't think about it, if you don't keep money aside from now, things will be much more difficult. However, if you do, then the power of compound interest again will be very beneficial to you. Whatever you keep aside, we will show you. If you kept aside that 5,000 shillings from 1980 or 1990 or whatever, we're able to show you how much it would be now. The impact is huge. So it's very important that you start early, and of course you maintain consistency as you go along.
And what about thinking about the emergency fund that someone should build up? Is that something you'd advise someone to also put up, also as they invest in life insurance?
Exactly, Eric. Again, a long time ago, one could get a job and you in that job or you remain with that employer until you get retirement. Nowadays, it may not be the case. Sometimes things change and you may lose employment, or you may start a business, it doesn't work out. So you need to keep something aside for emergency. The solutions that I'm talking about, the fidelity insurance plan, tailored to be able to assist you to do that. So that if anything were to happen, if you lose your job, if the business has a challenge, or if there's a medical emergency where maybe you don't have medical insurance, then you can go into that and utilize those funds to help you get through that challenge. So what we usually say is 10% aside for long-term savings, your retirement plan, and try and see if you can get maybe 5 to 10% for emergency. And again, as Jubilee Life, we're able to provide solutions for all these. We'll give you the retirement solution, and we will also give you a solution that will be more short-term, so that if there's any issue, then you can go into that, utilize it, and then progress.
Someone is saying life endowment also come with tax relief benefits. Is that something you agree with? Is that true?
Oh, yes. Insurance solutions very tax efficient. If you are contributing about 5,000 shillings per month, that is going to be deducted from your taxable income to get relief. And again, when the policy matures or when you get to the end of that policy, you get the benefits tax-free. The return that you get is also not taxable. I know for some of these other investments, there's usually withholding tax and all of that. So for insurance, if you're investing with us, if you're saving with us, you will enjoy very significant tax benefits. So it's a very efficient way of managing your taxes.
Someone here sent me quite a quick question about the NSSF Act of 2013 and how it's impacting retirement savings. How has that impacted retirement saving, and how has the role of fund managers like Jubilee Life been in managing this contribution? I think there are certain levels, if I understand it correctly, and then there is an optional level where someone can also choose where to invest. You're the expert here. You can help us maybe be a bit more aware on its impact on retirement savings so far.
Yes, thank you, Eric. So the NSSF Act came in to ensure that all Kenyans get an avenue for saving for retirement. What that has done is all employers are required to make sure that their employees contribute a certain amount of money into NSSF. The amount that was required to be invested was expected to increase gradually. And I know in February it will also increase to about 4,000 shillings. If you are an employer or if you're a member of a scheme already, you're allowed to opt out of NSSF and instead take your retirement benefits to a retirement benefits provider like Jubilee Life. So we have many employers who have come to us and said, yes, I'm required to make this contribution, but I want to make this contribution to Jubilee Life. We have been allowed to take NSSF contributions on behalf of employees. And even for informal businesses, if you want to save for NSSF, you are allowed to bring those savings to Jubilee Life. And of course, the reason why many employers or many individuals decide to do this is because at Jubilee Life, you're assured that your investments will earn a competitive return. So the reality is that all employers will have to comply with this. It means that, of course, that retirement savings will increase. It means that awareness in terms of saving for retirement will increase. But also, it provides us as industry players an opportunity to expand coverage and increase the number of people who we are able to support in terms of retirement saving. Yes, so that is there now. And as a pensions provider, we are prepared and we are supporting customers to be able to comply with this.
And then the contributions are going higher from next month. Could you prepare Kenyans a little bit on the impact?
Yes. So what that means, of course, is that if you are not a member of a pension scheme already, it means more of your salary will be reduced to go into NSSF, and your employer will be required to contribute more to go into NSSF. If you are already a member of a pension scheme, then what will happen is your pension contribution, a slightly higher amount will go into NSSF, and the remainder will remain as a top up in your pension scheme. So, as employees, we should expect reduction in our pay slips that would go towards saving. But again, this is much more severe, or it will affect those who have not been part of a pension scheme before. Again, sometimes it's not nice when that happens. However, if you think about it, these funds being kept aside so that you're able to have sufficient funds to fund your living expenses at the time. So it is not entirely a bad thing because the funds are yours and you'll be able to access them when you retire. So people should be prepared about that. But Jubilee Life, again, is available to ensure that whatever is taken from you is saved and invested properly so that you can get a competitive return, much more than what you would get with NSSF.
There's something the president has talked about, and I think it's been repeated by a couple of senior economists in the government. that Our saving rates is quite poor compared to other developed countries, and that we need to improve that. And then also, of course, the insurance penetration rate is pretty low. Could you speak to some of the maybe concerns and causes of some of this?
Yes, it's true that compared to other markets like South Africa and maybe much more developed markets, as a country, we haven't been saving as much as we should have. Again, a lot of it has been cultural. The times are changing. We can't continue relying on our children and relatives after retirement. And again, many of us who've grown up in the cities, we don't think about going back up country when we retire. So to continue living in the city, you need to make sure that you have enough. And that's why saving for retirement is so important. This NSSF Act is going to support Kenyans in improving the level of saving. It's not an easy process. It's quite difficult when you have your pay reduced. But ultimately, I think it will be beneficial for you when at retirement you have sufficient savings to assist you. So we are yet to catch up with those who are ahead, South Africa and others. But I think we have made very good progress. I think in this region we are far ahead, but there's much more ground to cover. And this will help us do that.
I don't see more questions from the audience, so I just want to perhaps ask you to give us a bit of your closing thoughts and your pitch to the people who are listening to come join you in terms of this journey towards making sure that people have some financial security.
Thanks, Eric. So firstly, it's just to thank everybody who has been able to attend. Like I said, it's a great privilege to engage and discuss some of these things. Times are changing, and we really need to think about the future. We really need to think about the future. And Jubilee Life is there to help you in terms of deciding and making the decisions around how to go about it. And we'll give you the tools so that you can decide for yourself the best way for saving, for education, for saving, for future investments, for saving, for retirement, and also for protecting yourself to ensure that your family, if your family does not have any challenges, if anything were to happen. And also, if you have any issue, like any disability or anything like that, that we can provide you something that can assist you get through that challenge. So reach out to us. We have advisors across the country, and we will be able to give you the right kind of advice and walk that journey with you to ensure that you achieve your aspirations. So thank you everybody for attending, and we are available anytime to engage and discuss, and we will support. Thank you.
Thank you so much. A quick one, maybe at the end, in terms of reflecting on your journey to become a CEO, what are some of the lessons you can share with maybe young people who are joining the field currently and maybe who aspire to be at the top? What are some of the things that you know now that you wish you had known back then that you would share with our audience?
I think one of the key things, it's really about discipline and persistence. If you have an objective to do something, make sure you put in the discipline and you make sure you persist until you achieve it. It's hard work, so you must be prepared to go through it. Ensure that you have a proper support structure around you. You create a network within whatever industry you're in. And that way, I think you'll be able to progress. It's hard work, it's not easy, but if you're focused, if you're persistent, if you maintain your network, then you should be able to succeed and progress in whichever career or industry that you're in.
Thank you so much, Asman, for your time and sharing a bit of your wealth of information and experience in this sector. There is a very good compliment that I'd send you. I've seen below a pinned tweet, someone has shared that with you, Jubilee Life is in good hands. So I'm betting that there's someone who has worked with you before. That's a good compliment. All the best to Jubilee Life Insurance. One of the spaces that I would like us to have in the future is one on just breaking down the financials of an insurance company so that people are able to understand the insurance companies and what they do and that's how their business through their financials at the end of the day. Thank you for joining us.
Yeah, thank you so much, Eric, and have a great evening, everybody. And we will engage as we go along. Thank you so much.